let's face it, Lululemon just simply continues to crash and crash and crash. Now the stock is down another 2% here, well, yesterday, and there seems to be no end in sight for how much the stock is going down. A little more and it's down almost 50% year to date. Now, welcome back to Growing Quality. My name is Adrian, and in today's video we will be looking at the most recent news, which is now put the stock under pressure once again. Because if we look right here, we can see that this year the stock has gone from well over $500 to now down to $280. This is a very big move, and well, the most recent news is that in 2020, Lululemon aimed to cut its environmental impact, but saw Scope 3 emissions rise, contradicting its goals. A lawsuit accuses it of misleading marketing since October 2020. And the other headline related to this as well is Lululemon Athletica is currently facing a class action lawsuit for greenwashing. I will explain what greenwashing is in a second. And it accused of misleading consumers about its environmental sustainability practices. Now, this doesn't look really good and it might sound a bit scary. So what happened is that an organization called Forest Ethics started gathering information about Lululemon's, environmental practices. They opened the tip line, as you can see here, for Lululemon employees to share information. They gave a guide on how to do so and not use company computers, for example. Now, this all makes quite a lot of sense, but they started gathering information quite a few months ago. Now, before looking too much into it, it might be good to know how credible Forest Ethics is, because, well, if this is just some small organization that hasn't really done anything yet, then we may hear some noise, but whatever, right? However, this company or this organization has been responsible for changing policies for corporations, well, as Wikipedia says it, including Staples, Office Depot, Victoria's Secret, Dell, and Williams-Sonoma. Now, I know Wikipedia is the most reliable source ever, but it does give you a good view about the reach of this organization. It's quite noteworthy, to say the least, if these companies have been affected by Forest Ethics. So what exactly are the complaints here? And well, I have two news articles which will explain it a bit better. So the first one says Lululemon Athletica is facing a class action lawsuit filed Friday that alleges the company portrays itself as environmentally friendly, when in reality they are causing significant damage to the environment. Now, immediately, this doesn't really sound good, right? This sounds quite harmful. This might sound like a blow to the brand. So, what else does it say? The lawsuit filed in the U.S. District Court for the Southern District of Florida claims that the company was duped consumers with the worldwide greenwashing campaign. Lululemon's marketing campaign messages are unfair, false, deceptive, and misleading to reasonable consumers as they portray Lululemon as something it is not, according to the complaint. Lululemon is responsible for significant greenhouse gas emissions, landfill waste, and release of microplastic into the environment. Now, Lululemon did not immediately respond to a request for comment from the Newswire. Okay, so these allegations, given that they are coming from a quite credible organization, one that has showed its influence before, well, that might not be great. So let's dive a bit deeper. Its actions and products directly cause harm to the environment and to the deterioration of the planet's health, the opposite of its Be Planet promises and representations, the complaint stated. In October 2020, Lululemon launched its Be Planet Impact Agenda, aiming to reduce its environmental footprint. The campaign promised that 75% of the company's products would use sustainable materials and vowed to cut freshwater usage by 2025. However, Lululemon's 2022 impact report revealed that its Scope 3 emissions have surged to 1.2 million tons of CO2 nearly double the 2020 levels. The complaint alleges that these emissions will continue to rise as Lululemon aims to double its revenue by 2026. Now that part is true. That's the 3x2 strategy. And the lawsuit claims that Lululemon's marketing, which often features natural imagery, misleading consumers into believing the company is environmentally responsible. Now they are bringing up good points here. I mean, using that type of imagery, making those promises, and clearly, due to the sustainability report, there are some mismatches here. And maybe they are quite well explainable, but there are some things to consider here. Now, it might be good to look into greenwashing, what it exactly is. Maybe you know it already, but greenwashing, also called green sheen, is a form of advertising or marketing spin that deceptively uses green PR and green marketing to persuade public that the organization, products, goals, or policies are environmentally friendly. Companies that intentionally adopt greenwashing communication strategies often do so to distance themselves from their environmental lapses or those of their suppliers. Now, Lululemon has a lot of their manufacturing of their products in Asia, and there the environmental rules are probably a little less strict. And I do know that Lululemon goes a long way in order to try and look how their suppliers, manufacturers are doing on an environmental basis. A few weeks or few months ago, they also came out with a report saying that one of their suppliers or previous suppliers was having some issues with their environmental practices, but that this wouldn't have affected the products that Lululemon is using or buying from them. So they do go a long way, however, maybe just not enough, or they're just growing too much. So let's say they are doing the greenwashing. They will be found guilty. Let's just take that hypothetical situation. We do not know this yet, of course, but what may be the implications of it? Because is it just going to be a slap on the wrist, or are there severe punishments for it? Now, we do know, of course, the Dieselgate scandal from Volkswagen, which was a little more than a slap on the wrist. However, this is not that, of course. This is way less severe. And if we look at some recent examples using the good old ChatGPT, we can see Walmart and Kohl's in 2022 paid a collective 5.5 million in fines for marketing products as being made from bamboo, while they were actually made from rayon. Okay. Goldman Sachs in 2022 was fined 4 million by the US Securities and Exchange Commission for failing to accurately disclose how it evaluated environmental, social, and governance factors. Okay, and BNY Mellon, the Bank of New York Mellon, faced a 1.5 million fine from the SEC for misleading statements about its ESG practices. Now, these are all multi-million-dollar fines. However, these aren't really big fines. I mean, if Lululemon, which in the last quarter had $1.8 billion in cash, would get a $4 or $5 million fine, of course, that's not fun. However, it's not going to break the bank. It's not going to make a real difference for the company. So, from that view, I don't think this news is that noteworthy. But as the stock seems to keep falling, maybe it's good to review the latest earnings report once again. Is it really just bad news after bad news after bad news, or is there some underlying problem with their earnings? Now, let's take a look at the last earnings report, basically. Well, if we do so, we can see that net revenues were up about 10% in the latest quarter. We see that gross profit was up a healthy amount, and we see that the gross profit as a percentage of net revenue was up 20 basis points. This is all very good. We see net income being up about a little over 10%, 11%, and EPS being up a bit more than it. So from the basic numbers, just the first headline numbers, earnings seems to be good. Of course, it's not growing at the rate it used to do, but the earnings seems to be holding up quite decent, at least seeing how low the stock is and how historically low the PE ratio is. This is good. I mean, this is good numbers. Now, for the 2024 outlook, here we see something that's quite notable. Because for the second quarter of 2024, which they will report to in, well, they are always very late. They had it quite recent. They will be one of the last companies to report earnings. But for the second quarter of 2024, the company expects net revenue to be in the range of 2.4 to 2.42 billion, representing growth of 9 to 10%. Once again, this is not the growth that we used to see from Lululemon, but we know the consumer is under pressure. This will also play a role in the recent, well, price movements of the stock. Now, seeing that the consumer is under pressure and still seeing 9 to 10% growth is good. However, we also know that a lot of this is coming from China. But we'll comment more on that later. Diluted earnings per share will be expected in a range of 2.92 to 2.97 for the quarter. This assumes a tax rate of approximately 30%. For 2024, the company continues to expect net revenue to be in the range of 10.7 billion to 10.8 billion, representing growth of 11 to 12% or 10 to 11% excluding the 53rd week of 2024. It continues to expect operating margin for the year to be approximately 23.3%. Diluted earnings per share are now expected to be in the range of 14.27 to 14.47 for the year. This assumes a tax rate of approximately 30%. And this is where it gets interesting, because you already hear it. Now they are expecting $14.27 to $14.47 of EPS. So that's different from what they were previously expecting. So what were they previously expecting? Well, for 2024, the company expects net revenue to be in the range of 10.7 to 10.8 billion. This is still the same. Diluted earnings per share are expected to be in the range of $14 to $14.20 for the year. For 2024, the company expects net revenue to be in the range of 10.7 to 10.8 billion. So this is the same with the most recent earnings release, because the part you are looking at right now, that's for the, Q4 2023, and their first guidance for 2024. And then the last picture you looked at, that was Q1 24 guidance. So they updated it a bit, because their first guide for 2024 was diluted earnings per share to be expected in a range of $14 to $14.20 for the year. They upped it to $14.27 on the low end, while the previous high end was $14.20. This is of course very good, because they are seeing an increase in EPS possibilities. And the newest EPS number doesn't include, well, the possibility of buybacks. So speaking about buybacks, during the first quarter of 2024, the company repurchased 800,000 shares of its common stock for a cost of $297 million. On May 29th, 2024, the board of directors approved a $1 billion increase for the company's stock repurchase program. Including this increase, as of June 5th, 2024, the company had approximately $1.7 billion remaining authorized on its stock repurchase program. Mouthful. Okay, so basically they have bought back almost $300 million worth of stock during Q1. And this was when the stock was falling, and it was still way higher than it is right now. They will be doing extremely aggressive buybacks. They authorized an additional $1 billion, and well, they can go at it right now because the stock is cheap. The stock is really cheap. Now, balance sheet highlights, which may be good to know. The company ended first quarter 2024 with $1.9 billion in cash and cash equivalents, and the capacity under its committed revolving credit facility was 394 million. So basically they have $1.9 million worth of cash and cash equivalents. They have the authorization for 1.7 billion in stock buybacks. Now they're not going to blow through that in 1 quarter or in 1 year. That would be bad policy to completely go through all their cash that quickly. But they do have the cash to buy back an absolute ton of shares of the market. And with the current stock price, they absolutely will. Now, like I already mentioned, I'd come back to that historically low valuation I already mentioned. And seeing the analyst expectations for 2024 EPS, which is at $14.34, a little bit above the low end of the guide from Lululemon itself, which was $14.27 to $14.47. But having this analyst estimate of the EPS number would make the stock trade at below a 20 multiple. I mean, that's just cheap. That's really cheap. Lululemon on average trades at a 28 to 30 PE ratio. That's just very, very cheap. Now, I already mentioned in a previous video that we were going through some hardships with the consumer, and I explained that I don't think we are currently really in a consumer recession, but the consumer is having a hard time right now. And this will add to the feeling that maybe Lululemon will underperform, maybe growth will slow down a bit more. However, what we have to know is that Lululemon in China is growing at a really rapid pace. And the revenue numbers coming from China are starting to become significant for the bottom line. I mean, the revenue in China is coming to a level where it makes a difference. And this is important because, as we have seen from Tesla and the other automakers, well, their sales are picking up in China right now. The consumer seems to be stabilizing in the country there. So that would mean that Lululemon will just simply continue to grow if nothing crazy happens. This is, of course, something that we will need to see and how it plans out. But as for now, the consumer in China is doing decent or getting to a better spot. And that will be good for Lululemon numbers, which means that they will most likely, or be more likely, let's say it that way, be more likely to hit their EPS guidance and expectations. Now, they will also be buying back a huge amount of shares. And in the updated guidance from Q1, the expected share repurchases were not counted in it, because you never know how much you are really going to repurchase. If the stock suddenly bounces back a lot, they will stop their repurchases, of course. And if it continues to fall, they will do more and more repurchases. Now, let me know what you think about Lululemon. Is this stock under pressure because of the consumer, because of disappointing growth, or just because it's going through a really bad news cycle? And let me know if you think that this newest lawsuit will have a material impact on the company. In my opinion, at best, it will be a bad look for Lululemon. It might impact their numbers, I'm not sure, but it will, of course, give a bad look for the business, claiming that they are very environmentally friendly, while in reality, they might be a little less than claimed. Now, I don't think a possible fine will have that much impact, but it will be more to do, or it will have more to do with giving them the public look of being less environmental friendly. If you have enjoyed this video, please remember to like and subscribe to my channel. And, well, I hope to see you in my next video. Bye.